Well, happy March. Have we reached an all time low in the amount of buyers buying homes in the market? Well, according to the National Association of Realtors, the answer could be yes. Pending home sales fell 4.6% to an all time low as of last month. What does that mean exactly? What are they comparing that to? Well, what they're comparing that to, and this will show you in a chart, is they're looking back from 2001 when they started collecting this data, and they're comparing every year compared to 2001 up or down. 100 would be equal to the number of home sales. Over 100 would be more than, and less than 100 is less than. So if we break it down by area, on average, only about 70% activity compared to what we saw in 2001. That's an all-time low. We haven't come down this far in the number of sales compared to 2001. Again, this is national. We are down here in the South, which has the strongest relative amount of sales. But as we break this down, the Northeast is slowing down, Midwest and West is slowing down. Austin has been in a correction for at least 3 years. Most of these areas have not yet, if they weren't building the same number of homes. So pay attention to that. But according to NAR, nationally, they're starting to see buyer activity reach a low. Here's what's going on in Austin. So this is Home Buying Institute had this article last week. They're saying that the prices continue to fall, and I'll show you some data here in a second to confirm that. So this is just laying the groundwork for what's happened the past 2.5 years. Here is a chart just showing, again, they've kind of buffered out the peaks. Every year, if you looked at this on a real chart, it kind of had an up in the spring and then down and up and down, up and down. But it is on the slide down. It's starting to level off, but it's still decreasing. But there's our median home price. If you were drawing a line from the appreciation pre-pandemic, we'd probably be about 40 grand below where we are right now if you continued that trend. So we're getting closer. We're not quite there yet. So why do they believe prices are continuing to fall in Austin? Here's some of the top headlines. So overheating and subsequent correction. Yes, we know that. We've been talking about that for 3 years. We got super hot, almost doubled in price in 2 years. And since then, we've been in correction mode. Rising interest rates, tightening credit. Again, we've talked about high interest rates. The good news is, I'll show you in a minute, the rate has come down noticeably since January. We'll see if that starts to have an impact for the spring market. Excessive inventory, new construction. Austin's been one of the top metros in the country for building new homes, building new apartment complexes. So adding that surplus in a market right when the market slows down. The tech industry has had a slowdown. We are starting to see hiring again. But again, when you slow down, that slows down the amount of people moving around. Changing migration trends. There's been some articles I think are misleading that says Austin's losing people. They're not losing people. We are still growing by about 50 or 60,000 people as a metro a year. Some of the people have left the city, which is more expensive, and moved out to the suburbs. That's definitely true. And we're seeing a little less numbers coming from outside of the state, but Austin does continue to grow there. Widespread economic uncertainty. Again, just think political headlines. So they're just saying, hey, until people feel like they know, they're kind of waiting to see what's going on. So they're explaining that. Here is Texas as a breakdown of median home price. So Austin right now sitting about 440. Dallas about 368, El Paso 223, much more affordable there. It's basically half price in El Paso compared to Austin. Houston's about 305, McAllen is the Valley 221, and then San Antonio about 279. So Austin continues to remain being that kind of premier, more expensive city because it is more tech weighted. And I also think Austin is more dense. People prefer to live closer to the city, whereas in Houston and Dallas, almost everybody I know lives way out in a suburb somewhere. So that tends to be what we see in those bigger metros. All right, this is February data, and I want to break this down. So we're talking about which way is the market going right now as we enter March. So this is February 2025, number of sales. And just to set the stage, if you see this graph over here, that's where we're pulling those sales from. So San Antonio is down here. That's, we're not tracking that market. It's not part of our market, but everything else, all these counties here, we're tracking as part of these sales. So we had 1,868 sales. That's down 17.4% from last year. That's not price. That's just buyer activity. we're just seeing a lot less buyer activity in February. Median sale price about 420. That's down 3.4% from this time last year. So the price is continuing to soften a bit. Median days on market was equal to last year, but average days on market went up a little bit. Over and under asking, let's talk about that. So when you list a property, let's say you listed at 500,000, that owner may do a price reduction if they're not getting activity. Let's say they lower it to 480, and then they get a buyer who offers them 2.7% under the asking price on average. So that's what the average over and under asking right now since the pandemic. In a normal market, on average, properties typically sell a little bit below the full list price when you factor them all in. So a normal market would be close to list price, but maybe a little bit under. A hot market obviously averages over. And then, of course, a cold market might average even more. This is to the original list price, 93.4%. So again, that's about 6.5% off the original price that a seller is seeing. So we're seeing that cool off. Here's what that looks like in a chart. So if we go back to the beginning of the pandemic, if you look at this far left-hand side, obviously sales in June 2022, that was the very end. Rates had gone up by then, but the buyers hadn't quite, they were still battling over some stuff before the inventory built up. So they were averaging still about 2.4% above list price. Since then, you can see the prices came way down and they get even softer in the winter. Pay attention to this. December was the lowest. They were closing almost 10% off list price at that time. And then it kind of warms up in the spring, tightens up to about, 6%, 5% once you get to June. And then it cooled off again for the winter. Then it warms up again in the spring. Then it cools off in the winter. And we're just now starting to arch back up for the spring. So we're going to see how that plays out. This again right here is days on market. So again, you can see back in the pandemic on average, it was like 6 days. If you look at the black line, peaked up at 53, dropped down in the spring, up in the winter, down in the spring, up in the winter. So we're entering the spring market. This is usually the peak time that's going to tell us how the next, 4 months is going to go, is going to kind of tell us maybe how the fall and winter will go later this year. Let's look at some real-time data. So this is historic sales price trend. So again, this is 4 years of price, median home values in that same metro we talked about. And you can see here's where we had the pandemic rise. But since then, the biggest fall was 2022. Second biggest fall was 2023. Slightly less 2024. And here's that tiny little spring bounce. We're starting to see it pick up on the chart. So we've stayed above 400,000, but anemically, it's not a lot of energy yet pouring back into the market. This is active single family homes, and the blue is sales per month of single family homes. So again, here's last spring, April, May, June on the left-hand side. Get rid of that. So you can see on the number of listings, we peaked out in June and July last summer, and we peaked out on sales last year about 3,200 a month. As I just showed you in February, we had about less than 1,900. So we should see more sales typically as we enter the spring months, but we've had kind of some sales taper off. We also had listings taper off. And here we go. Ignore this final bar because that's March. We just started March basically today as a business day, but we should see March climb up. We're going to see at the end of the month, we're going to start to see these listings climbing up. What we want to see is the sales. So December, we had 2,500 sales, January, 1,862, and February, 1,701. They haven't recorded all of them here, but just know we're seeing that taper off. And so we want to start to see that spring climb in terms of the number of sales. Let's talk about mortgage rates. This is actually some good news. So right now, the 30-year fixed is down to about 6.74, call it 6.75. We're seeing FHA and VA getting into the low sixes. And this is what I call the par rate. This is kind of an average, but really, if you have good credit, you're going to get below these rates. So we're starting to see rates come down. Here's what that looks like on a chart. Sorry to give you the dizziness. All right, so this is the 30-year fixed rate mortgage. If I go back to January 13th, we were at 7.25. So we were above 7. We stayed above 7 until we really got to about near the end of February, February 20th. But since then, we've seen another quarter point come down. Is this a trend yet? Not here to say, but I will say we're down half a point from a month and a half ago. So if you're a buyer right now, you are getting a half point better than the buyers at the beginning of the year. So I think that's some positive news. We got to watch that and see if that kind of helps the buyers as we move into the spring months. All right, well, here's some fun headlines. So, how does Austin rank from 1 to 10 in some of the recent studies? This was just a fun article. Best capital to live in. I think I shared that a week or two ago. Of course, we are. We are number 2 as being a healthy city. Number 3 for being underrated. I guess you're underrated when you're number 3. Makes sense. Number 4, great for hybrid work. Number 5, we like to party. I guess not me, but I know most people do. Residents of ATX have more fun, of course, because we party. International businesses do well in Austin. Locals are super smart. I love that one. We need to be higher on that list. Austin stays caffeinated. Why? Because we got to perk up after drinking so much. And then Austinites need to watch their language because, again, when you're drinking a lot, you might swear. So kind of a fun list, but I liked that. This one I also liked. Austin hustles on a new list of top 10 hardest working American cities. So I love it, but you'll get a crack out of this. So when I scroll down to get some of the data, here's how Austin performed across the 6 major categories in the study. Remember, this is hustling. We were number 5 on the list for the share of households where no one works. Well, what are they What are they doing? What's the hustle? But anyways, average work week, we were up. Leisure time, employment rate. It's kind of a weird study. So anyways, I enjoyed that. This was in Wallet Hub if you want to look up that article. So where are we right now? I would say if you are a seller, we are not out of the woods yet. We are still seeing some anemic buyer activity. I think a lot of buyers are cautiously kind of wanting to get into the market, but they're watching rates, they're watching political headlines, they're seeing if anybody else is buying, and everybody's a little like this. If you're in the top 5% of properties, you are fantastic, you're in a great location, you're staged, it's fully fixed up. Yeah, some of those are getting multiple offers. We have definitely had buyers. So I've had some listings where we've had multiple offers. However, it's that or not. There's no middle. And so it's either it's working that first weekend and you get it sold, or it's a sludge. And so we're starting to see that in the market. Again, lowest number of sales, 17% below last year in terms of buyer activity. That's a noticeable amount. So granted, this is backwards looking. February was very cold. So was January. We're now getting into the good weather months. We're getting interest rates to come down, but it might take a month or two before we're going to see these numbers improve. And really, we're going to wait and see kind of how are we doing as we get into later in the spring. On top of that, we are sitting now higher on inventory than we were at this time last year. So if that continues, we should have more homes for sale for these buyers as we enter the spring months. So sellers, you got to have the property in great condition. You have a lot of competition and be willing to talk to and negotiate with the buyers. If you're a buyer right now, it's kind of shaping up for you. So I think right now you might have a last year to be able to get into the market where you have lots of inventory, not as much competition. Rates are starting to come down, but you don't yet have that kind of swing in demand. It'll happen like that when it does. So if you're a buyer, don't wait, because then you'll be back in a busy store again and fighting over the shelves. I don't think it's going to go nuts like the pandemic, but it does tend to pop when that happens. Anyways, I hope this was helpful. Make sure to watch our videos each and every week on YouTube. Click at Ryan Kelly Group. You can click that subscribe button and follow us there. And of course, hey, if you are planning to take action this spring, buy, sell, invest. And of course, now I am a licensed mortgage lender with Keller Home Loans. If you want to talk about financing, reach out to us. We would be happy to help you. Anyways, if you want more data, reach out. Enjoy your week, and we'll talk to you then.